We've had a series of interactive and interesting sessions right from day 1 up to day 3. And we had a practical session for about 2 days on WhatsApp groups to ensure that everybody actually understands what is being taught, especially what was taught on day 3. Day 3, we actually had a live practical session where I showed you how to deposit on crypto exchanges. I showed you how to make withdrawals. I showed you how to use P2P. I showed you how to do spot trading. I showed you how to do limit and market order. Everything that we actually explained on day 2, the theoretical aspect of it, we then did the practical aspect of it on day 3. So we then held an additional 2 days of practical session where each person was expected to make a trade, make a deposit of at least $12 to $15 minimum to your Bybit account created. Bybit is the exchange we are using for this class. So at least make a deposit of $12 to $15 on your exchange and try to make a trade. And from what I saw from the number of persons who did the task and from the WhatsApp group that was created to monitor your growth, I saw that a number of persons have done it. And even at a lot of persons are still having issues understanding. But that is a major aspect of why GIDA is here. Do you understand? So the best thing I would encourage you to do, if you've not done the practical, ensure you do the practical tasks that were given so you can actually learn. You learn best when you practicalize what you've learned. So it doesn't just remain theoretical, but actually when you do the practical, you get to understand better. Do you understand? So you get to understand better when you actually do practical. So do not just keep accumulating knowledge. That is one thing I would not appreciate from the class. Don't just accumulate knowledge from day 1, day 2, day 3 without actually trying to practicalize and see if you really understand how to use limit order, how to use market order, how to make deposit and all. You could actually be accumulating this knowledge, and at the end of the day, you get to find it very difficult to actually even make a trade because you've not done the practical when the knowledge was still hot in your brain. You understand? So if you've not done the practical, I would encourage you to ensure you do it before this class ends. Today happens to be the last day of this class. Actually, we've actually been very fast and we've covered actually everything. So today's class would be the last day in this series. So if you've not done the practical, by tomorrow, after today's class, watch the necessary video for you to watch, which is the 3's practical class, and get on up to speed and make your own practicals. Do the practical tasks that were given. Try to make a trade, buy the token that was required. Try to make a limit order. Try to make a market order and various other tasks that were given, and submit your screenshots so that you can be very sure that the purpose of the class was achieved and that you actually understand everything that you've learned so far. Before we kick on with today's class, if you are in this call and you've done the practical tasks that were given, simply reply with done in the comment section. If you have made a practical trade on Bybit exchange, made a deposit and made a trade, reply in the comment section with done. If you've made a trade, if you're in this call right now and you've made a trade, you've done a practical on what has been taught so far, which is making a limit order, making a market order, and trying to make deposits, and even using P2P. Reply in the comment section with done. Awesome, awesome. I'm seeing lots of replies. This shows a number of you are following. A number of you are following. Like I said, the best way to actually learn is actually practicalizing. Do not just keep accumulating knowledge, learning without actually going into the process. So you have to ensure you try to source fund within this period while the class is still on or while it is ending, while every knowledge you have is still anew, so you can actually practicalize, and then you can be sure that you actually are following. Awesome, awesome, awesome. Seeing lots of responses. So yeah, that's fine, that's fine. Awesome. So I'll be sharing my screen in a bit. uh in a minute, I'll be sharing my screen to the slide. Can you all see my screen? If you are seeing the PPT slide on my screen, please reply in the comment section with I can see your screen. Can you all see my screen? If you are seeing the PPT slide, if you are seeing my screen, reply in the comment section with I can see your screen. And just a quick notice, as I mentioned before, if what you are seeing on your screen isn't clear, ensure you click the three icons at the top right of your screen. Uh, that is a menu. It will bring up a list of menu options for you. Click on the settings icon there. That is that wheel icon. Change it from 240 to 720. That is the resolution. So if what you are seeing on your screen is blurry, if the video you are seeing displaying on your screen is blurry, ensure you put scale up the resolution so you can actually read what is displayed on the screen. Do you understand? That is a simple fix. Whenever you're watching a YouTube video or stream and it's kind of blurry, simply click the menu and go to the settings and then increase the resolution. Awesome, awesome. Everybody says they can see my screen. So yeah, so like I said, this is a 7 days December crypto bootcamp session by Ginakev Digital Academy, that is GIDA, which is titled Fundamentals of Cryptocurrency Trading and Blockchain Technology. Over the past 6 days before now, we've been going through lots of series to ensure that everybody actually understands this whole concept of crypto from the basics. Everybody actually understands what blockchain is actually in depth, which is the goal. So today is actually this was day three. Today is day six. Day three was the last session we held, the practical session, and we then held the 4 and 5 on WhatsApp where everybody practicalized. Like I said, if you are watching this video, even after this session ends, ensure you do the practical, most probably today or tomorrow, why the information and all is still fresh in your memory. Do you understand? So today we're going to be looking at crypto and blockchain basics, and we are going to focus on blockchain consensus mechanisms. In day one, we discussed about blockchain, we talked about uses of blockchain, we talked in depth on applications of blockchain, we talked about the difference between Bitcoin and blockchain, we talked about what blockchain really is. We told you that Bitcoin is built on the blockchain and various use cases of blockchain. And in day two, we talked about the blockchain explorer, which is like a browser for the blockchain network, and we actually did a practical task in day two of how to use the blockchain explorer, and you saw that information that is spread across the blockchain explorer is actually transparent. You can actually track data as they are added on the blocks. And we also told you about the mempool, which is where transactions that are not yet confirmed are stored if in the meantime before they are then added to the blockchain before they are then added to the blockchain, to the existing blockchain. And I equally told you that the first block that is created is called the Genesis block. So today we'll be looking at blockchain consensus mechanisms in order to add to our knowledge about blockchain, as many persons do not really know these consensus mechanisms, and it's very crucial that anybody that is venturing into crypto knows them, because they will be used in every day-to-day life. If you are a crypto trader or a crypto investor, you're in every day-to-day activity which involves research, trying to filter out tokens to know the best one to invest, the best one to buy. You are going to be hearing about this blockchain consensus mechanism, so it's imperative we talk about them. We're also going to talk about cryptocurrency mining, understand all the intricacies there is to it, not just know a general overview about it where people know mining is for making money, but really understand what is the purpose of mining, get the basic and foundational knowledge, the fundamental knowledge about cryptocurrency mining. What is it all about, and what are the things required? We're going to talk about airdrops and bounties, necessary tools for airdrops, and I will take your questions as well. So just a minute and we'll move to the slide for this. All right, this is day six. Now, let's talk about blockchain consensus mechanisms. Now, what is consensus? To actually understand what blockchain consensus mechanisms actually are, you have to understand what the word consensus means. Now, consensus generally means overall agreement, when everybody is in agreement with each other on a certain topics that has been laid out. That is what we refer to as consensus. And that is one very important criteria of the blockchain technology. As I mentioned to you, that the blockchain technology is not like the traditional world where you have servers. You have servers that are in charge of making decisions Just like in the banks, for instance, the banks rely on servers. That is where they put the customers' data, transaction feed, everything is being put to the server. So the server is a centralized system, that if it goes down, that means that bank is down. You hear of when you go to make some deposit to the bank, they tell you they don't have service, or something is, they are offline. That is, they are trying to work on their server or something like that. So you see that everything is put on pause until they try to resolve it. Now, but in the case of blockchain, it's not just one computer or one node, but it's a chain of nodes. That is why it's called a blockchain. It's a chain that links to another block, that links to another block. Just that once information is broadcasted, once information or data or a new block is added, it is broadcasted across all blocks immediately. Do you understand? Now, that broadcasting among all blocks immediately is what we refer to as consensus. So all these guys have come together, they have come together to form what they call nodes. So each computer that partakes of the blockchain network is what we refer to as a node. Now, the information is broadcasted across all nodes. So the coming together to agree on something is by these nodes is what we refer to as consensus. And then there are various mechanisms which they use. Now, like I said, instead of the authority for keeping account being centralized in a single entity like a bank, cryptocurrency uses distributed ledger. Distributed means it's spread across all nodes to record information. So therefore, a general agreement is needed between all nodes or participants in the blockchain to actually secure the network or carry out an operation on the blockchain. Remember, one most important thing or feature that makes blockchain stand out compared to the traditional financial system is security. The blockchain network is very, very secure because it's not just one centralized system that once it's attacked, everything goes off, but rather it's a network of nodes that you can't attack everything at a time. It's very, very difficult. You can, if you want to change a transaction, you want to change anything, every computer has to be in agreement. So you see that it's very, very difficult for such to actually even occur. Now, all consensus mechanisms, understand the goal of these consensus mechanisms we are going to talk about. Consensus, like I said, is the agreement. So we have various means with which they agree to do things and keep the network secure. So every consensus mechanism actually aims to secure the network. That is the main goal. So it aims to secure the network by making it expensive to attack the network, as it is more profitable to protect it. So they are all trying to secure the network by making it expensive to attack the network. If the network is very, very expensive to attack, you see that, when you try to take down one node or two nodes or three nodes, it's your resources are going to finish. Talk more of attacking all the nodes in the network. That is not even possible. So the most important blockchain consensus algorithms or consensus mechanisms, there are lots of them, but we are just going to highlight three, which are the most common consensus mechanisms basically used across most crypto tokens out there or crypto coins. So the first one is proof of work. You hear people talking about POW. That is proof of work consensus algorithm or consensus mechanism. Then we've got proof of stake. That is POS. POS doesn't mean what you use in withdrawing cash as in the traditional world. In crypto, when you hear POS, it means proof of stake. Then we've got delegated proof of stake. This is DPoS, consensus mechanism. Ensure you're taking down notes as it helps you to actually learn better. So you can go over it again. So ensure you're taking down notes. So the first one, like I said, is proof of work. The next is proof of stake. And then the next is delegated proof of stake consensus algorithm. Now let's look at them in details. Now, the proof of work consensus mechanisms, the POW rather consensus mechanism refers to proof of work. This implies a requirement to define an expensive computer calculation, also called mining, that needs to be performed in order to create a new group of blocks on the blockchain. POW is done using special hardware devices, GPUs and CPUs. Bitcoin uses the POW model. Now, let me explain this in detail. When we talk of proof of work, just look at that name, this way we looked at the word blockchain. POW, proof of work. This means that work is actually being done, and what you are presenting is a proof that you've done work. This tells you when we talk of work in crypto or work in blockchain, it's not a minor thing. Work requires resources. Work requires energy. Work requires strength. That thing that shows that you've done that work, that proof that you've done that work, is what makes POW stand out. Bitcoin uses the proof of work model. Now, when we talk about this work, that is where we now refer to that work that they are doing is called mining. You can just think of mining in the traditional world. When you're trying to dig the ground, looking for gold, looking for something, you are doing work. And at the end of the day, your body is going to show that you actually work. That is the proof. Your body is going to be dirty. Your body is going to show you are worried. You are spending lots of resources. That is the proof in the traditional world. Now, in the case of crypto, when we talk of proof of work, these guys do what they call mining using expensive and hard, very very intensive hardware, using special hardware devices, hardware, hard GPU, that's graphic cards. They use graphic cards. The hardware they use to do this mining are not easy things, to come by. They are actually very expensive. So that is the work they do. And at the end of the day, because they've done this hard work to achieve that consensus and add a new block to the blockchain, remember the end goal is making it hard to attack. That is why you see that in proof of work, the kind of work they do there is not something that they can attack one node and bring it down, because the hardware they need to attack that node, or the resources they need to attack just one node and bring it down, is quite very expensive. It's quite very expensive. Now imagine the number of nodes that we've got spread across. Imagine a token that has 10,000 nodes using POW. Is the network will be very very secured. So that is proof of work, and Bitcoin using the proof of work model. We're going to look at that extensively. When we talk about crypto mining, you get to understand it better. The next is POS mechanism, which refers to proof of stake. Now, this is the next step in cryptocurrency evolution that promotes further decentralization. This comes from proof of the first one was proof of work, and then from there we now have proof of stake. Like I mentioned to you before, in the case of proof of work, they require lots of hardware resources. You require constant electricity, that is 247 electricity. The node must be online without going offline. Then you also require internet 247. The node must never go offline. When I say never go offline, you must know that internet and electricity are the most important criteria. And then you now have to buy as much hardware as you can get, as much processors as you can get, to be able to protect the network. So the proof of stake mechanism doesn't involve as much intricacies as the proof of work mechanism. So it removes the technical and expensive POW environment and allows anyone, just anyone with a modern computer or smartphone, to earn from supporting the blockchain. So as you support the blockchain, yes, you can earn. So here you can get more coins by staking some of the coins you already bought or have in your wallet. So you do the staking yourself and you get the profits to your wallet. Do you understand? So in this case, you are supporting the blockchain. Remember, as these guys are doing proof of work, they are supporting the blockchain, keeping it secured, and the blockchain is rewarding them. That is making it more attractive to support the blockchain than attacking it. It makes it more expensive to attack, because as people are getting more incentives to support the blockchain, if you are trying to attack the blockchain, these guys are making it more secured. But in the case of proof of work, it's limited to only a few persons, as not everybody can go into mining. You don't have the requirements, you don't have the required hardware. So these guys earn from supporting the blockchain, right? In the proof of stake mechanism, it removes those technical intricacies and it makes it accessible to all. So everybody can actually participate and earn from supporting the blockchain and keeping it secure. So here you do staking. This is where we talk of stake. If you hear people talking about staking their tokens, this is where it comes to play. So in this case, you are not mining per se, but you stake and earn more reward. And as you stake, you're actually supporting the blockchain, and the rewards you earn for your staking is actually what you get for supporting the blockchain network. So you do the staking yourself and the profit goes to your wallet. Ethereum uses both proof of work and proof of stake mechanism. They recently migrated to POS and are trying to go mainstream so people can actually stake Ethereum, that is supports the Ethereum blockchain, and earn rewards for it. But at this time, it's still more of proof of work. Then we've got the delegated proof of stake, DPoS. This DPoS mechanism is just like POS, but it's an advancement, a further step ahead in POS mechanism. So it's very, very much similar. Now, how it works is that the delegated proof of stake, the word delegated, what does it mean to you? Delegate means that you've given that power to another person to do things on your behalf. Now, let me break it down in layman's language. Back then in school, we talked about forms of government. We have direct government and indirect government, right? Now, when you talk about direct government, this is a government where everybody is actually playing a role. That is, everybody is actively involved in direct government. Everybody makes decision. This is just like a town hall meeting. Everybody comes together and agrees before something is done. Then in indirect form of government, you elect representatives to do things for you. You give them that power, you vote them, then those guys actually do the next stage of the voting. I don't know how the main government thing works, but I think they have you select House of Reps. Let me use that as an instance. Then the House of Reps now elects their own leaders, right? That helps them make decisions. And at the end of the day, you expect that these people have your own interest at heart. So at the end of the day, you are expecting some remuneration in terms of development onto your end, you that have supported them. That is, you're expecting some reward, if I should put it that way. That is exactly how delegated proof of stake is. In proof of stake, in POS, normally everybody can participate. But in delegated proof of stake, and everybody can participate in POS means that they have removed the most important, that is the hardware criteria of POW, but it doesn't mean that everything is removed totally. You need a computer, you need to be, a computer to actually participate in proof of stake. You need other requirements that some people may not have. Do you understand? Some people may not have that in proof of stake. But in delegated proof of stake, one or two or three or four persons may have those requirements. So what happens is that every other person now comes together under those persons and then supports them, then tell them go further and do the stake. And at the end of the day, those people that were voted to do the work, they call them super representatives in some tokens, like in Trump blockchain. So those guys that were elected to do the work, that is to do the staking, they then receive rewards from the blockchain for supporting it and then give a portion of it to those people that supported them. That is just the flow. Do you understand? So it gives each stakeholder the power to vote for their preferred representatives, which support the blockchain with their resources. So these elected representatives support the blockchain with their resources. And then once they get rewards for supporting the blockchain by voting, you know, whatever rewards they earn per block for supporting the network will then be distributed to you, the voters, at their stated percentages. So it's just like Kevin, or GIDA, for instance, there is a blockchain network we want to support and earn some rewards. Remember, these rewards are paid out per block. And I told you, Bitcoin block is given out every 10 minutes. That is how Bitcoin, new blocks are added every 10 minutes. So every 10 minutes, somebody is actually being rewarded for supporting the blockchain. The same thing applies to various other blockchains. Some blockchains add blocks every 1 minute, some add every 30 seconds, things like that. So you can just imagine every 1 minute somebody's earning this reward. Every 1 minute you're earning reward for supporting the blockchain. So we then decide to go in to support one blockchain to earn rewards. And then we have our computer always on 247 steady internet, 247 electricity never going off, because this is also one of the criteria to participate in POS, proof of stake, because you need to have your own computer, dedicated computer. You need to have internet, and then you need to have uh, you know you need to have internet, you need to have electricity 247. So your node always has to be standby, but in this case you're not using hardware, but what you use is coins. Do you understand? The higher your stake, the higher number of tokens you stake in that blockchain, that is the higher the rewards you earn. So imagine we decide to go into this, we are making good money on our own without anybody's support. We then decide to open up this service where you can actually stake with us, and we give you like 10% from whatever thing we earn. So every block that comes in, if the block reward, for instance, is 100 tokens that are being given to us every 10 minutes. That's the block reward every 10 minutes, 100 tokens. If we say we are offering you 10% for staking with us per annum, we're offering you 10% per annum for staking with us. It means that at the end of the year, we're going to give you one token out of that. Or if you say we're offering you 10% every day, something like that, you are going to see it stated there. So you are going to earn some rewards for supporting these guys. That is a super representative, because you cannot afford to be a super representative yourself. You don't have the requirements, although it's proof of stake, and most of the entry cases are being reduced, from proof of work, but you still cannot participate due to other engagements. You find out you are in a situation where you don't always have light. You are in a situation where you don't, cannot have steady internet and other things. So you then go with super representative. So the blockchains that do this is what we refer to as DPoS, delegated proof of stake mechanism. So just to rephrase, the slight difference between POS and DPoS is this. In POS, that is proof of stake, you support the network yourself by staking your coins yourself to earn more coins. While in DPoS, delegated proof of stake, you vote for super representatives who will distribute the rewards to you they do the staking on your behalf and then distribute the rewards to you, and you earn more coins. The end goal is that you still earn for supporting the blockchain. So Tron uses the DPoS mechanism. So that's the difference between proof of work, proof of stake, and delegated proof of stake. Today, we have other different types of blockchain consensus mechanisms, but all of them emanate from these three. These are the three core, foundational consensus mechanisms that are there. We may have different things here, proof of commitment, proof of whatever. When you read them, you're going to find out that they all emanate from this. So once you understand these three, which are the core values, the core consensus mechanisms, you're not going to have any issues when you are researching. So basically, when I'm researching into what I basically do is just search, or when they during an AMA, what I basically ask for is what consensus mechanism is your token built on. If you mention proof of work, I know it's something that requires mining and extensive hardware to participate and earn block rewards. Then if they mention proof of stake, it means that you can stake your tokens, buy the tokens, stake it, and earn more rewards for supporting the blockchain network. Some blockchains offer you as high as 50% per year for supporting the blockchain. Some offer you as high as 100% and things as that. That is proof of stake. Then in the delegated proof of stake model, if I found out that's what they do, and you don't have the enough resources to become a super representative yourself, you can just look for any of the staking you know just look at any of the super representative or validators. That's another name for them. You look at any of the validators that you wish you've seen the percentages that they are offering you, and also you've studied about them to know they are legitimate, because you are putting your trust in them. You are not dealing with the blockchain directly. You are passing through somebody. So ensure you do accurate research. So that is the DPoS model. So these are the three most important blockchain consensus mechanisms. Is this clear? Is the difference between proof of work, proof of stake, and DPoS clear? If it is actually clear, please indicate in the comment section with right on. If the difference between proof of work, proof of stake, and DPoS is actually clear, please indicate in the comment section with right on. I will increase the screen, but I just want to know, did you understand everything I've explained about POS, DPoS, and POW? If it is actually clear, please indicate in the comment section with right on. If the difference between POS, POW, and DPoS is clear, please indicate in the comment section with right on. Awesome, awesome. Everyone is following. Everyone is following. So that is basically the difference between POS and DPoS. It's very, very important that you actually understand this. Now, let's talk about cryptocurrency mining. What is cryptocurrency mining actually? Let's forget every other knowledge you have about this topic, but understand the core and fundamental thing about it. Now, cryptocurrency mining is a process in which transactions for various forms of cryptocurrency are verified and added to the blockchain digital ledger. That is it, simple and short. Mining is a process in which what transactions of cryptocurrencies are verified. They are what? Verified. This is a keyword you should take note here. Transactions are verified and are added to the blockchain. Like I told you earlier during the day one, I mentioned that we have the mempool where you have a list of unverified transactions pending. When you try to send crypto to somebody and it doesn't get sent instantly, what you can check is you check the blockchain explorer using your wallet address or the person's wallet address or the hash provided. With that, you can see whether your transaction is confirmed or not. And I told you, when your transaction is not confirmed, there is a place it usually goes to. What's the name of that place? Let me be sure you all are following. If your transaction is not verified, there is a place that you can actually find it under in a blockchain. What is the name of that place where your transactions are actually held for the meantime? When your transactions are not verified, what's the name of that place? Indicate in the comment section. What's the name of the place in the blockchain explorer where the transactions that are not confirmed are actually found? Indicate in the comment section. There is a place on the blockchain explorer where transactions that are not confirmed immediately are actually found. What's the name of that place? Let me be sure you all are following. Correct. I think I've seen one person who has gotten the answer. Mempool. Mempool. I think you are getting the point, but the spelling is Mempool. Mempool. That is correct. You all are actually following. Very bright students. So mempool is the place where you can actually find mempool is the place where you can find unconfirmed transactions. So these transactions are not yet verified. So cryptocurrency mining basically is a process in which these transactions are actually verified. And you know what verified means? It means that they are then added to the existing blockchain. Like I told you, blockchain means a chain of blocks. There is a chain that links to this block, that links to the next block, that links to the next block. So just like building a house, the instance I gave you on the first day of this class, it's just like you are building a house, you put a block, place your cement, add the next block, place your cement, add the next block. That is how the blockchain is. So from the Genesis block, which is the first block you placed, up till this moment, blocks are being added using the transactions per second thing. So Bitcoin has a block time of 10 minutes. So every 10 minutes, a new block is added to the blockchain. Every 10 minutes, a new block is added to the blockchain. So that is actually what is called mining. When you add a new block to the blockchain, that is mining. And people that do this verification of transactions and people that do the mining are called miners. And at the end of it, the beautiful thing is you are getting rewarded for actually supporting the blockchain. That is, for verifying transactions and doing things like that, you are supported with rewards for supporting the blockchain. So the mining process, adds blocks containing unconfirmed transactions. Take note of this. So cryptocurrency mining adds blocks to the blockchain that are containing unconfirmed transactions or information of past transactions to the blockchain. So this mining process involves competing with other crypto miners to solve complicated mathematical problems or puzzles. Now, understand that the mining process isn't that easy as it sounds. Just pick a transaction and add it, pick a transaction and add it. Remember, we have thousands of nodes, we have thousands of miners that are there on site trying to mine and add transaction to the blockchain in order to earn this transaction reward. So Satoshi is a very smart man when he actually built the Bitcoin process. So this mining process involves competing with other crypto miners to solve complicated mathematical problem. So that's 10 minutes before the block is added. It's actually time for them to solve that mathematical problem. A mathematical problem is presented to all the miners. It's just like a puzzle. But it's more of mathematics. Puzzle is brain work, right? So puzzle is still mathematics. So a mathematical problem is presented to them using cryptographic hash function. So the miners are expected to solve it. So the first person that solves it is the person that gets the block reward. Once you solve the mathematical problem, your transaction is going to be added to, you're now going to be the person that gets the block reward because you then add the unverified transaction into the blockchain. So that is the goal of the cryptocurrency mining thing. That is adding transactions to the blockchain, adding unverified transactions or information or data to the blockchain. And remember, you're going to get reward for doing this, but it's not a simple, straightforward process because it requires complex mathematical problems or puzzles. So being the first person to solve this complex puzzle accurately, earns the miner some crypto reward called block reward. Take note of that, very crucial. What we refer to as block reward is actually what you earn for supporting the blockchain, being the first person, talking about the proof of work model actually, being the first person to solve the mathematical problem earns you a block reward. And that is why you see many miners buying many hardware, because this mathematical problem is not something you can solve with just one device. While you are using one, the next person is using 10. So you see, if your one device is taking like 1 minute to solve, the guy that has 10 mining devices, you see, it takes him faster time and he has more chances of actually earning or winning that block reward. The guy that's having 10, the next person is having 100. The devices they use to mine this thing is usually called ASIC. ASIC. You can go and read about it online. There are various hardware they use, but ASICs are the most common. If you've seen a mining rig, I don't know if I can still find this video. I will then show you how the mining thing looks like. So there are various things actually intricacies that are involved, but that's what makes it beautiful, and that's the work there involved, the proof of work thing. So when you are be able to do this work and solve that complex mathematical problem, you are going to be given the block reward. So mining actually serves for two purposes. There are two purposes that cryptocurrency mining actually serves for. Now let's look at them. Now, for every proof of work coin, there must be mining activities. Have that at the back of your mind. For every proof of work coin, POW coin, there must be mining activities. Every proof of work coin has an algorithm, not consensus algorithm design or consensus mechanism. There is what we call, referred to as an algorithm that they use in mining, known as mining algorithm. So every proof of work coin has an algorithm they use in mining them, known as mining algorithm. So I'm going to tell you some of the most common mining algorithms we have. This is something you should know. In most quizzes, crypto quizzes you have, they ask these questions, and some people don't know them. But it's something you should have at the back of your mind always. Now, Bitcoin's mining algorithm is called SHA-256. Make sure you write this down in your notepad. SHA-256 is the name of Bitcoin's mining algorithm. That of Ethereum is called Ethash. People that mine Ethereum, when you're trying to mine Ethereum, the algorithm you're going to use is called Ethash. For Bitcoin, it's called SHA-256, SHA-256. Now, for a mining algorithm to work, this is how it goes. So for a mining algorithm to work, there must be a network known as mining network or mining pool. That is the first thing. It's just like your mobile phone. For you to connect to WhatsApp or for you to join this class, you need network, isn't it? You need a mobile network like MTN to connect, or Airtel, or whichever you're using. So for mining algorithm to work, there must be a network known as mining network or mining pool, which needs to be connected to the coins network before miners can hash transactions. When we talk about hash, HASH, you saw the day we're trying to verify transactions on the blockchain, trying to backtrack. I told you about hash. Hash contains all the transactions within that block, isn't it? When you were looking at the blockchain explorer we used on day one, on day two rather, you saw where there was a string of letters or numbers there. That is referred to as the hash. It contains all the transactions in that block. So before miners can actually hash transactions or mine coins, what we refer to hashing of transactions, it means you're mining the coins. So before you can actually start the process of mining these tokens or hashing them, you must have a mining network you're connected to, and then you must ensure that you are on the right mining algorithm. So basically, a computer's miners hardware, the hardware the miners use, they spit out hashes at different rates. You can have things like mega hashes per second, that is mh per second, giga hashes per second, gh per s, tera hashes per second, depending on the unit it uses. This knowledge is something people tend to overlook, but it's important you know this thing so you actually understand how the mining process actually goes. So what are the basic things, like I said, you need? First, you need to know the algorithm. If you are trying to go into mining, you need to know the algorithm for that token. You must be connected to a mining network. And then you need to have a dedicated computer hardware with a specialized GPU. GPU means graphical processing unit chip, or application specified integrated circuit. ASIC, that's what I was talking about. Look at it. ASIC means application specific integrated circuit. These are the hardware that you use. So you either use a graphical processing unit, a dedicated GPU chip, or you use an ASIC. And then you must have sufficient cooling means for the hardware, because as this is trying to solve that complex mathematical problem, it's going to be heating up. So you can see the many intricacies involved in POW. You need to have steady internet, you need to have steady electricity. Your hardware is going to be heating up because it's trying to solve this complex mathematical problem within the block time. Before the next block is added, you want to be the first person. So the more they require, the more the hardware you have, you can see the more it heats up. So that's why you see that most of those that engage in mining, these mining rigs, are actually not small places. A mining rig can take up to how a room looks like. I don't know what kind of room. We can say half of a city, something like that. That's how large these mining rigs are, because these guys are actually trying to secure the blockchain and at the same time earn rewards. So the more the mining rigs you've got, as the more the mining hardware and things you've got, the more chances you have of earning the block reward. And then for you to have such long large number of devices, you have to have sufficient cooling means for the hardware. So this is basically the major things that are involved in mining. Now, like I mentioned to you earlier, in order to encourage miners and mining to continue securing the network, that's increasing security of the blockchain, each block contains a reward of new coins. That reward is released to the miner that successfully solves the block puzzle I already told you before. Now, let's take Bitcoin as case study to understand this thing. The process of mining uses the SHA-256 algorithm, as I've told you before. Therefore, this SHA-256 algorithm generates Bitcoins per block. Let's look at it generally. I told you earlier that we have 21 million Bitcoins, right? That's the total supply of Bitcoin. And one feature of it that stands out is that total supply can never be added to it or reduced to it. Just like we have in the traditional world where government can just go and print money anyhow, causing inflation. Now, in the case of Bitcoin, that 21 million Bitcoins, how it was done is that the miners, earn block reward every 10 minutes, isn't it? Now, in order to keep things going and kind of make it scarce, Satoshi built a process called Bitcoin halving. That is the halving of the block reward. When you hear of Bitcoin halving, it doesn't mean your Bitcoin will go in half. It's the block reward that these miners earn for actually, supporting the blockchain. Now, every 4 years, Bitcoin undergoes a major event known as Bitcoin halving. This system was designed in such a way that after every 4 years, the reward gotten for validating transactions, that is mining, is halved in the real sense. The first set of blocks to be mined was done by Satoshi Nakamoto himself or themselves, as we don't know whether it's a single person or a group of persons. So the first set of blocks to be mined in Bitcoin was done by Satoshi himself. As at then, the block reward was 50 Bitcoins for validating transaction. That is as at 2009, obviously, because Bitcoin was created in 2009. So the block reward, that is what somebody was earning every 10 minutes for supporting the blockchain, was 50 Bitcoins. You can just imagine how much it is worth now. But as at then, it was worth trash, because even then, as at 2.9, 2.10, you could mine Bitcoin with your laptop. You don't need dedicated hardware as right now, as people do. As at then, you could just use your laptop and mine Bitcoin, but people were taking it for granted. You could even play games. There were some games that were played then to earn Bitcoin as reward, the way we have play to earn games right now. Then they were earning like 10, 20 Bitcoins, but it wasn't worth much as at the time. So people actually tend to overlook it. So back to what I was saying, the block reward as at then was 50 Bitcoins for validating transactions. And so it was like that for a period of 4 years. That is when the halving thing now came into effect, because it was already programmed to be so. So the halving thing came into effect in the next 4 years. So that was in 2012. That was from 29, 210, 211. Okay, that was 2.8 actually. 2.8, 2.9, 2.10, 2.11, 2.12. So as at 2.12, the block reward of 50 Bitcoins was halved into two, so that the reward was reduced to 25. 50 divided by 2 is 25 Bitcoin. So from earning 50 Bitcoins, miners started earning 25 Bitcoin after that 4 years. Now, after that 4 years, in 2012, the next 4 years, the block reward was halved again. It's from 25 divided by 2 will give you 12.5. So that was in 2016. The next one happened in 2016, reducing the block rewards to 12.5 Bitcoin. So every 10 minutes, somebody was actually earning 12.5 Bitcoin. If you are the first person to solve that complex mathematical problem, every 10 minutes you're earning 12.5 Bitcoin. You can imagine how many 10 minutes we have in a day. That will give you an insight on what miners earn, but they spend as equal resources to earn that reward. So they actually what they are spending to maintain the mining rigs. So it reduced the block reward to 12.5 bitcoins. And again, in 2020, this one I actually experienced this halving when it occurred. The block reward was reduced plus divided by two. From 2016, if you add it to 4 years again, that would be 2020. So 12.5 divided by two, the block reward is now 6.25 BTC. That's approximately 6.3 bitcoins per block. That's in 2020. And then in 2024, there's going to be another halving. So it will keep halving. And the beautiful thing about this thing is, as the halving occurs, most times there's usually a rally. Once the halving occurs, the next year there's usually an intensive rally. As at this time, this 2020 halving that I experienced with some of my students at the time, that was when GIDA actually started officially, 2020. When I talked about the Bitcoin halving, Bitcoin was around $8,000, $9,000. And I told them that from research, because I actually love doing research, it showed me that after halving, price of tokens usually pump, price of Bitcoin usually pumps the year after. And I told them we are looking at 50K. Everything seemed like, oh my God. It's just like somebody telling you that Bitcoin will be $150,000 right now. As at this time, Bitcoin is $50,000 approximately, around 40 to 50,000. And somebody is telling you that Bitcoin is going to be 150,000 or $200,000. It seems surprising, right? It seems impossible. That's how it felt then. As at that time, Bitcoin was around 8,000, 9,000. I was telling them we could even see $50,000. And I think this year we've even seen 60. And that $50,000 happened in less than a year, because that was from 2020. The next year is 2021. So you can just imagine in 2024, when the next halving occurs, expect that in 2025, we are going to have a very sporadic rally in the price of Bitcoin. So you never can tell. That is why it's good to position yourself. Never think you are late, but always key in. Do not keep waiting until you have enough resources to key in. So that is it. So the mining reward will keep reducing every 4 years. So in 2024, right now, what people are earning every block is 6.25, approximately 6.3 bitcoins. So actually, in 2024, it's going to be reduced by two again, 6.25 divided by two. Who can tell me what will be the block reward in 2024? Let me be sure you all are following. The block reward in 2024 is expected to be what? If the current block reward is 6.25, who can do the calculation and quickly tell me what is the expected block reward in the next 4 years? Let me be sure you all are following. What is the expected block reward in the next 4 years, taking into consideration all I've just told you, that the mining reduces the block reward in two. That is not the mining actually, but the halving. It reduces the block reward in two. Who can tell me the expected reduction or the expected supply of the block reward? Correct. That is 3.125. You all are following. Approximately 3.2 bitcoins. That's what they are going to earn every hour for supporting the blockchain network in the next 3 years in 2024. So that is one thing that makes Bitcoin, we try to call it a deflationary model, where the supply, it keeps that this mining is actually what brings tokens into circulation. As I told you, there are 21 million bitcoins, but right now we have 18 million in circulation. So as the miners are adding, every minute 6.25 is being added. Every 10 minutes 6.25 is being added. 6.25 is being added. That is, it's being added to circulation. So mining solves the issue of maintaining the model to see that everything is in order. So they actually add tokens into circulation from the circulating supply. So that's from the total supply. So it makes sense, and the process is very good. So what impact does halving have on the economics of Bitcoin? I've already mentioned that. So this is all there is to mining. So what are the things I want you to note from this now? One, understand that there are scammers available ready to deal with you. Scammers are available ready to deal with you because they understand many people do not have this knowledge of cryptocurrency mining. I'm never ashamed, but I always share the experience. Back then in the day when I was still new to crypto, I fell for this Bitcoin mining scam. I don't know if any of you have. They told you, I actually understood the process. This basic knowledge that, you cannot mine Bitcoin anymore, because the hardware requirements are no longer, you don't have you cannot mine it on laptop as before. You cannot mine it on, you don't have the requirements. So you need a, large hardware requirements, you need steady internet, you need steady electricity, you need cooling devices and things like that. You need ASICs, you need dedicated GPUs, powerful ones. I already understood all those. But it's only possible, you can also join a mining pool where you see that people have these requirements. All you basically need to do is support them, just like in super representative of DPoS. But it's very, very rare to find legitimate ones. So with the basic knowledge I had then in 2018, I still fell for this scam. They created a website, have mining packages. They say you buy hash rates, things like that. Anybody that tells you can mine Bitcoin is lying to you. It's a scam. Do not fall for it. Rather, what you can have is sets where they tell you to click every hour or things like that. Or what they do is they let me explain it better. I understand some of you may have some of these apps on your mobile phone or on Play Store that say they mine Bitcoin. Actually, what it is a set. That is, somebody has already funded it with crypto before now, and what they are basically doing is every hour they ask you to click on that. It shows something on your dashboard, right? Or it does it automatically. It tells you to click once in a day, or as you're using the app, it's mining for you. It's not actually mining, because your phone cannot mine Bitcoin. If you actually understood all I've said so far, you should understand that you cannot mine Bitcoin on your mobile phone because of the hardware requirements. Your mobile phone doesn't have those hardware requirements that are required to mine Bitcoin. So you already should know that you are not mining on your phone. What you are doing rather is simulated mining. When I talk about simulated means that you um simulated mining means that it seems as though you are mining, but you are not actually mining. Do you understand? It's just like a faucet. Somebody has pre-funded it with tokens. So what you basically need to do is click every hour and you'll be earning those rewards until that faucet ends. That's the meaning of faucet. So that is what most of the mining platforms right now look like. But what I'm saying generally is when anybody tells you of any Bitcoin mining rig or something that you should go and invest with them, please stay far away. Those faucets that are free, you can try to toil around with them and some of the rewards, although it's going to be small because so many people are trying to earn, so they always try to reduce. It's not like they are doing giveaway but using crypto form of it, so you have to work for it actually to earn some of them. But if you see anything that tells you about crypto mining, Bitcoin specifically, Bitcoin mining, please do not venture, so you can actually stay safe. So you cannot buy in Bitcoin. Know that at the back of your mind. Don't even try the venture, else you're going to crash your system because it doesn't have the required hardware requirements. That is the dedicated GPU. It will not be able to carry the entire blockchain. You cannot even download it. The entire blockchain is in terabytes. I think I saw somebody that downloaded it about 100 terabytes. So it will not, you can't even contain in your system. So that is it about crypto mining. I suppose you all are understanding. If the process of Bitcoin mining is very clear right now, please indicate in the chat box that I understand. Please write on. If you fully understand all the intricacies that surround Bitcoin mining right now from all I've explained, indicate in the chat box with I understand. Please write on. If all I've explained about Bitcoin mining makes sense and you fully understand this and you understand all the intricacies surrounding it, indicate in the comment section with I understand. Please write on. If you are going back to this video, rewatching it, ensure that if you want to see the comment section, where you click is live chat, so you can see the comments in live chat. You will not find them in the normal comment section of YouTube. You won't find them in the normal comment section of YouTube because this is during a live stream. So if you are trying to view the comment section of this while watching it at a later time when the stream has ended, click on live chats and you will see it. Awesome. Also, everybody says they understand. Awesome. Great. So let us proceed. Everybody understands the process of Bitcoin mining and all the risks involved, as I've explained. Now, let's talk about crypto airdrops and bounties. Crypto airdrops and bounties. Now, there are lots of cryptocurrency projects in this space, a lot of cryptocurrencies. And just like businesses in the real world, they also engage in advertisement, marketing, and publicity. So airdrops are one of the ways that these guys use for their publicity, getting you to know about them. Now let's look at the case of Bitcoin. Bitcoin was the first. Bitcoin was number one. So it actually didn't need any much publicity. It didn't need to do, it didn't need any stress, because it was the first. It had that tag of being the first cryptocurrency. So things were quite easy for it. You don't need much effort. It didn't need much effort in marketing it. People got to adapt to it naturally. Even today, a little child in the womb, he ask them, what do you know about crypto? They say, I need Bitcoin. I know about Bitcoin, things like that. Now, after Bitcoin, every other currency that came, there was the first, the second, third, fourth. Cryptocurrencies were now too much. So people found it hard to actually adapt to them. Nobody was looking at the others. It's just like you bring a new product in the market when there are already existing products in that same market that offer that similar or that same service. Many people are not going to buy your product, right? Until you do something like a kind of discount, huge discount that will make them want to buy that product. That is how these cryptocurrencies came about. Most of the cryptocurrencies you see today, they had to do airdrops in order to use it as marketing. So they are giving you those tokens for free. Normally, in the case of Bitcoin didn't do any airdrop. There is no recorded any airdrop that Bitcoin did. Satoshi didn't do any airdrop for Bitcoin. You understand? What they basically you have the only way to get Bitcoin is by buying it. And most major tokens, Ethereum didn't have any airdrop. The only way to get Ethereum is by buying it. But imagine they give you these tokens for free. But that's a very good way, because nobody loves dislikes anything that is free. Everybody loves free things to a certain extent. So these projects use airdrops as a way to share these tokens for free to people, as a way of marketing. So you receive this token, Emeka receives it, David receives it, Adebola receives it, everybody receives it for free. Obviously, you are getting to know about that token. People, you're going to talk about that token, things like that. Even Shiba Inu did an airdrop to what's this guy, Vitalik Buterin, the CEO of Ethereum. They sent it to his wallet. That's how the guy got to know about Ethereum, Shiba Inu, and the rest of them. So airdrops are one of the best ways to make money in the crypto space without much capital. When you are just starting out in crypto, airdrops is one of the ways that you can use in making money. You can get these projects tokens for free. Whenever it is now listed, you can then sell it and use it to make money, or you can even decide to hold it if you find out it's a potential project. So as I said, usually when a particular project wants to advertise, they first of all create basic tasks with incentive of their own native token as rewards to build up their community. Remember, it's free, but you have to do certain tasks. You help them in growing their community. You help them with their social presence. And some of the tasks are very, very basic, very simple to do. And examples of them include following them on Twitter. They create a Twitter account, new Twitter account, and they need followers. So they now reward people that follow them on Twitter. So you have to have a Twitter account. Then you must tweet about their projects to create awareness for non-community members. For instance, you have a Twitter audience, so they ask you to retweet their tweet pin posts. You not just follow them, but retweet their post or post retweet, things like that. That way you're also marketing for them actually without knowing it, because the non-community members on your list are seeing it from your tweets. Also, they ask you to join their Telegram groups. Sometimes they may ask you to sign up on their website. Sometimes they may ask you to subscribe to their YouTube channel. And before we proceed, ensure you subscribe to this YouTube channel. Very, very important. Don't just watch the videos, but ensure you subscribe to this YouTube channel. So if you're in this live stream or you're watching this video at a later time, make sure you subscribe to this channel. Hit the subscribe button, like this video, like this live stream, like this video you are watching currently, to be sure to show that you show support that the content being dished out, you actually value it. Ensure you like this video, and subscribe to the channel, like this stream as it's ongoing, and subscribe to the channel so that our content can be showed to more persons to receive this knowledge. So as I was saying, sometimes they ask you to subscribe to their YouTube channel. Some ask you to like their Facebook channel. Just basic tasks revolve around social media. So it doesn't require much hard work. In less than 10 to 15 minutes, you're actually done with the airdrop tasks. The airdrop tasks are very, very basic. But understand that actually there are also scam airdrops. In everything that there is good, there is also bad. Do you understand? Scammers always try to take advantage. So some of them use this as ways to build just farm your data. When I talk about data, I don't mean your mobile data, but your information. For example, your Twitter handle, your email address, your YouTube, your Telegram handle, everything. They use it in farming data, and then they go and sell this data on the dark web and other data selling sites. So they sell this data. There are times you see that you've been receiving emails. You did not subscribe to an email list, but you've just been receiving emails from those people consistently, and there is no way to unsubscribe. It tells you that your data was sold to those people, so they have access to your email. Although you've not visited the site before or subscribed to be receiving email alerts from them, the email is just being sent to you continuously because they got your data from someone or somewhere. So some of these scam airdrops do that. You see that after everything, they don't rug pull, close down the social media, lock the Telegram group, the Twitter account, change it to another name, change the Telegram group to another name, and at the end of the day, you find out that they ended up lying, and it's already too late to get by your data. So you must be very diligent. That's the end goal. You must be very diligent when making this. So what are the tools you need to participate in airdrops? Number one tool is Twitter account. You need to have a Twitter account. Have at least 100 followers. You spend your time building followers at least 100, because most of the airdrops require you have at least 100 followers that are following you on Twitter. So the first and most important tool is Twitter. You mustn't love using Twitter anyways. You mustn't love using Twitter. Like I said, I always tell some persons this when I ask them to engage on a post on Facebook or on Twitter or something. They say, I don't use this social media. You mustn't love using it. You have to adapt simply because you are pursuing a goal. Airdrops is one of the best ways to make money. So the first tool is Twitter. So make sure you have that. If you can't access it, you use a VPN. The second most important tool is have Facebook account. Most of the airdrop tokens require you to most of the airdrops require you to like the Facebook or engage on their post, something like that. So you must have a Facebook account. Create a Facebook account if you don't have one. Make sure it is your own account and not another person, so you don't infringe on their own privacy, as you will have to submit the details regarding to that Facebook account, not your login details anyways, but rather something like your name and Facebook link. Then the next tool you need is a LinkedIn account. Some of the airdrops require you like their LinkedIn post. LinkedIn, that's one social media many people are not conversant with, but you must have it for the purpose of airdrops. The next tool is Reddit. There is a forum called Reddit. It's one of the tools you need. Some of them ask you to engage on their Reddit thread. The next tool you need is Telegram. A number of you aren't for using Telegram. That is very sad. Telegram is one of the best social media you must have an account with. So if you don't have a Telegram account, please create a Telegram account ASAP and ensure you join our Telegram group. The Telegram group link is in the description of this call. If you are not in this Telegram group yet, please join our Telegram channel so that you can keep up with updates even after the end of this session. You understand? So most of the airdrop tokens ask you to join their Telegram channel or join their Telegram group and engage there. And at the end of the day, they reward you for doing that with their own tokens. So as I said, please ensure you join our Telegram group. Click the description of this video and you see the link to our Telegram group. Join there and follow up, as we'll be kicking off with other activities on Telegram soon. Then the next tool you need outside Telegram is YouTube. Create a YouTube channel, as some of them will ask you to submit your YouTube channel link after you like their video. Creating a YouTube channel doesn't mean you must be using it. It's just creating it for the purpose of submission of data. So you can create a YouTube channel for the purpose of liking their videos and things like that, commenting on the post, so that you can submit the details for them to actually verify. They always verify that you've liked and stayed like that until they reward you with those tokens. So if you find out you don't receive the reward, it means that you forfeited or you didn't do one of the most important tasks. So these are the most crucial tools. And then you must have an email address. Now, make sure you have a different email address for airdrops. Make sure you have a different email address for airdrops, not your normal email, as some of those data you may end up falling for a fake airdrop and then they sell that data. So it shouldn't be the one you use for your school, it shouldn't be the one you use for your workplace and things as that. So make sure you use a different one. Just like in airdrops, you must have a wallet address. Again, that is another tool. So ensure you have a non-custodial wallet I already spoke about custodial and non-custodial wallet. Custodial wallets are the ones you get on exchanges, the hot wallets. While non-custodial wallets are the ones you get in apps like Trust Wallet, in apps like SafePal, in apps like you know them, MetaMask. So most of the airdrop tokens, when they ask you to submit your wallet address, don't copy from exchange. I repeat, don't copy from exchange, as you will lose it. You will lose that airdrop if you send to that wallet address from an exchange, because the token is not listed there, so it cannot be received there. You can only send a token to an exchange if it is listed there. For instance, on Bybit, which you are using for this trade, when you are asked to send in the tokens to trade to do your practical task, don't send BNB, because BNB is not listed there as at this time. If you send in BNB, it's going to be lost and there's no way to recover it. If you send in a token that's not listed there, it's going to be lost and there's no way to recover it. That's the same thing that applies to these airdrops. So some of them actually tell you don't submit exchange wallet address. Why some won't tell you, but you should have it at the back of your mind now. So this is something you should know if you attended this class that I'm teaching now. Make sure you don't submit an exchange wallet. Always use Trust Wallet or MetaMask, as MetaMask and Trust Wallet is usually universal. Don't forget this. I'm saying it again. Always use Trust Wallet or MetaMask. Those are the two wallets you should be using for your airdrops. Trust Wallet or MetaMask. Those are the two wallets you should be using for airdrop participation. Do you understand? So you must have a wallet address. That is another important tool. How can you know the scam from fake and real airdrop? You have to be able to do your own research. Do due diligence. Do what? Due diligence. Do research. You don't just jump on anything. There are certain things we refer to as red flags. For instance, you visit the website and all you're seeing, you see grammatical errors everywhere. It tells that this person is child's play, because when they don't spend quality time building their website and white paper and things like that, it shows that the person has plans or intentions not to stay in the program for long. So they may just pull off anytime. So whenever I see grammatical errors on any website of any acclaimed cryptocurrency, I simply don't engage. I allow it to pass by. So that is one of the red flags. And sometimes they may ask you for additional, access to your social media account, things like that. Once you just send it like that, run away. Just like some airdrops that will ask you to submit your seed phrase, do not engage. Your seed phrase or private key, any airdrop that asks you to submit your wallet address, then the next process they ask you to submit your seed phrase, don't engage. Then again, another way you can know a fake airdrop is when they ask you to pay money to receive the airdrop. It's telling you to pay for gas fees. Do not engage in such airdrop. You are just paying money to these guys to enjoy their life. I remember there's one airdrop we did back in the day with Ethereum. Then Ethereum gas fee was low, so it wasn't really much of an issue. But when I looked at how much this guy had collected, they asked everybody to submit $1 for gas fee so they can send the token to us. I actually submitted and I received this token. Yes, I received the token after the submission of the gas fee. You pay it to the wallet address. When I now track, because I love using the Explorer very well to get some information, I now track the wallet address that we send these funds to. I saw that as at that time when Ethereum was around just $200, this guy accumulated $1 million from that $1 everybody was sending. Everybody actually received the token. Have this at the back of your mind that receiving an airdrop token doesn't mean it's legit. I posted something on my Facebook handle today. Some persons didn't understand it. I said that you see a token in Trust Wallet, that you receive something in Trust Wallet, or you see price, doesn't mean that thing is legit. Do you understand? Because scams can still be sent to your wallet. You still be seeing them showing price. It doesn't still mean it's legit. Where you know it's legit is when you try to swap it or trying to exchange it for another token. That's when if it's not swappable, you've just been played. So this guy made $1 billion as at that time, from collecting funds from people. It seems little, but compare it to the number of people that are going after that airdrop. And at the end of the day, boom, he changed the Telegram, then changed the Telegram group name to an airdrop group. So you can imagine how funny that is. From token, he's now turning into an airdrop group where you can now share other airdrops. So that means what they basically do is they keep creating these things. When you give them that social presence, they turn it to an airdrop group, promote one of their own fake airdrops again they've created. That way, people keep falling Mugu over and over. And that is the essential reason why we have this class now, to talk about crypto airdrops and bounties. So I do not want a situation where after listening to this class, you still fall for these persons. After everything I've mentioned here, you still fall for one of them just like crypto mining, all these fake airdrops. Make sure you do your due diligence. Now, just like I said, as you can see, even as airdrops are great ways to make money, beware, bad players are in the picture. So always verify the authenticity of an airdrop. Now, this is an additional way like to I created for you to know if an airdrop is legit. Always verify, very important. This is it. Always verify from official media handles of the project to be sure they are running an airdrop. To be sure they are running an airdrop. How you can do this is by, first of all, okay, I've seen people sharing links on WhatsApp. They say Ethereum airdrop, Bitcoin airdrop. It seems so funny to me. How you can know that these tokens are doing airdrop is first of all by verifying. You cannot say Ethereum is doing an airdrop, then you go to Ethereum social media, they don't talk about it. You cannot say Bitcoin is doing an airdrop, you go to Bitcoin social media, they don't talk about it. There must always be an announcement somewhere that we are running an airdrop. Every airdrop, that is ongoing on any token, they always announce it in their Twitter or on their Telegram. So always verify by joining the official Telegram account. Most of these airdrop guys are very smart. They will give you the correct website for that token. Then in the link, they are going to have a different link to a different Telegram group. Say for instance, what token should I use? Say Pancake Swap, that's cake. Pancake Swap, cake token. So say somebody says they are running cake airdrop. What they will do is this: they will create a Telegram group or maybe one of their scam groups that they've used to build data. You see lots of people inside a group, thousands, or you see 1,000, 2,000, 3,000 people inside a group. Then they will call that group Pancake Swap, the same name that the main official Telegram group of that token is bearing. They will call it the same name. And then they will tell you they are running a cake airdrop. All you basically have to do is send one cake and receive 100 cake, something like that. They do that with Ripple a lot. So you are going to find out that the name of the group is going to be the same, but the group link, the Telegram group link is going to be different. I'm always very careful with Telegram group links. So instead of wasting my time, whenever I see a group link, one of these airdrop bots that says something like Pancake Swap airdrop, instead of wasting your time clicking on it first, how you can do is this. Number one, check CMC, that's CoinMarketCap or CoinGecko, or any exchanges where they are listed in for details about them. Look for their social handles. Look at this thing I'm highlighting now. Very important. Look for their social handles. That token, look for their social handles. Then join the Telegram group from those their social handles list. Observe and verify. I said observe and not engage. I said observe and verify. So don't just see any link anywhere, random place, and believe it. You must first of all do your own research to confirm that these people are running an airdrop. It's just like you saying that what token? BNB, yes. BNB is one popular one you all know. It's just like you saying BNB is running an airdrop of 100 BNB. You keep seeing people sharing these airdrop bots. Stop that. Stop doing that. You're wasting your time and even spoiling your reputation in front of people who know the game very well. So ensure you join the main social media. You don't have to waste time clicking that bot first. Go to Google. Like I said earlier in one of my posts, when you can Google, you can get anything. Go to Google and type in the name of that token, then add CMC at the end. For instance, BNB. You now go to Google and type BNB coin market cap. It will now show you the coin market cap link of BNB. When you open it, you click on socials, you see the social media handles of BNB, you see their Twitter, you see their Telegram group, you see everything that regards them. You now join the Telegram group. If you do not have Telegram, you join the Twitter and go through all the tweets. If you don't see anything relating to an airdrop, that tells you that what you have there is a scam and don't engage. Else, when you join it, you are selling your data to these guys. You are giving your data to these guys. Do you understand? So what you have there is a clone. So do research on the project, whether it's legit or a clone or even a scam project. Anybody can do an airdrop. Have this at the back of your mind. I'm repeating. Anybody can do an airdrop. You can receive it just like the one I received back in the day. It's still in my wallet till today. It will show price. You understand? Some of them will show price, but it's not legit. So stop using the fact that you are seeing price on Trust Wallet or anything to call an airdrop legit. Do you understand? So anybody can do an airdrop. Make sure you do your own due diligence before sharing the links out. I don't share any kind of airdrops. If you've gone through my Facebook profile, which is my most active social media handle, I share lots of airdrop opportunities that makes very much sense to me, and I give you detailed process on how to go about it. you see that what I share are things that are of high value, that I've done due diligence and research on. So ensure you do your own research carefully before sharing the links out, else you are spoiling your reputation. Do you understand? So say you hear of a Tron airdrop, using Tron for instance, first thing you should do is this: check Tron's official Telegram and Twitter handles to see if they really announced an airdrop, or whether it's a clone, that's a different group that is created and named Tron group. You can then proceed to do the required tasks once you have confirmed that that main project is the one running the airdrop. PS, any airdrop that requires you to send funds to them first for distribution is probably a scam. Don't engage in them. Do you understand? Don't engage in them. Any airdrop that asks you to send funds first is a scam. So this is how you can verify authenticity of an airdrop. Make sure you write these templates down so that you can actually go over it again. And like I said, ensure that you like this video as it's ongoing, and subscribe to the channel. Now, most people keep talking about Telegram airdrop bots being a scam. I don't blame them anyways, because I actually have the same mindset. Most of the Telegram airdrop bots are scams, not all anyways. So that is why where it comes, doing your own due diligence comes in. You have to do your own due diligence to verify that this is legitimate or fake. From some of the Telegram bots, I've gotten enough money. I've made good money from them. Like I said, airdrop is free money, but it's not everything you see you'll be pursuing. Somebody sent you a group link, a link to a bot. You start clicking. You start engaging in the airdrop because they said airdrop is a way to make free money. No, most of the Telegram bots, those are the kind of airdrops that are usually scams right now. Telegram bots, they are scams. They are just used to build data and sell out. Do you understand? So that is how you can know a real from a fake airdrop. Is this clear? I think with this, we don't have much to discuss today. This is the most crucial thing. We discussed about Bitcoin mining. We discussed about blockchain consensus mechanisms, and we discussed about airdrops. So at this point in time, we've come to an end of this 7 days crypto crash course by GIDA. Tomorrow being the 7th day, I'll be observing in the WhatsApp group for a number of you who haven't done the practical. Ensure you do it this night or tomorrow, so that what you've actually learned actually sticks to your head. That is the most important thing. Learning, not just learning, but actually doing practical, so be sure you've actually understood all you've learned. So ensure after this call, you come back to this video and rewatch it to actually understand the process and everything involved in all we've explained today, and ensure you stick by it. Lastly, going forward, we shall have educational series as this from next year. We're going to have every week, we're going to have kind of a live session or a video uploaded in this channel. So we're going to have a live session as this every week from next month, if from next year if possible, so that we're going to share more knowledge. So to be able to have more reach, ensure you like this video and subscribe to the channel. Very important. As you watch the video, subscribe to the channel so that when we publish, you get it gets across to many persons, and ensure you hit the notification icon to be notified when we have a session. So ensure that you actually follow us on all our social media. As you can see on the screen, you can follow me on Twitter at Kevin Chiboyim on Twitter, and follow our official GIDA account at official_GIDA on Twitter. You can find me on Facebook by searching Okoye Kevin Chiboyim on Facebook. You're going to find me. Click the follow icon on my Facebook profile to follow me. And you can find GIDA on Facebook as well. Join our Telegram group, most important, at official GIDA. The link is in the description. You can join our Facebook group as well, official GIDA, as we share content there. Most importantly, Facebook, because that is where I'm most active on, even more than Twitter. So you can follow me on Twitter, follow me on Facebook, join the official GIDA handles so that you'll be up to speed when we have any more sessions as this, so that you can learn. And by the end of this session, this call today, ensure you tweet on Twitter about what you learned on this class, tagging our official Twitter handle and my account as well. Or you can post this about in your Facebook handle using the hashtag GIDA. Give us a good review about what you've learned throughout the duration of this course for these 7 days. What you've learned, or how you've practicalized, whether what you've learned actually made sense, and or tag the official GIDA account and tag my Facebook account as well. Make sure you do this on your Facebook timeline so that persons on your list can actually get to know more about GIDA. So this is time for Q&A. If you have any questions, please ask now. We're going to take just 2 questions. If you've got any questions on all we've taught so far in today's class, please ask now. We're going to take 2 questions before we come to an end of the session. Are there any questions?